Hello, I'm Laura Anderson. I am OSCR's Head of Professional Advice and Intelligence. Today I'm here to talk to you about accrued accounts, or sometimes they're referred to as SORP accounts. Let's have a look at what we're going to cover today on our agenda. First of all, we're going to do a recap on the basics from our first webinar when we gave an overview about all the accounting requirements for Scottish charities. Then we're going to look at who can actually prepare accrued accounts, which charities are eligible to do that. Then we're going to explain what the SORP actually is. We're then going to go on to look at the basic elements of accrued accounts so that you know what should be included in a set of accrued accounts. Then we're going to talk about what is the main difference between accrued accounts and receipts and payments, or R&P accounts. Then we're going to round off by looking at what happens with external scrutiny of accrued accounts, and then finally look at how OSCR can help you with all the guidance that we have available. So let's get started. Recapping on the basics then from webinar 1. Every Scottish charity must prepare a set of accounts each year and file those with OSCR within 9 months of the charity's financial year end. So if a charity has a financial year end of the 31st of March, the accounts have to be filed with OSCR by the 31st of December. Charities are required to file their accounts with us through the electronic portal which is called OSCR Online, and they need to file them at the same time as their annual return is completed and submitted through that portal as well. There are 2 different types of accounts that Scottish charities can prepare. The first that we're going to look at in detail today is called accrued accounts, and the other is receipts and payments accounts, and we looked at receipts and payments accounts in detail in webinar 2. So let's move on then and look at the detail behind accrued accounts and who can actually prepare those accounts. Every charity that is a company has to, regardless of the size of the charity, prepare accrued accounts. So if you're a small charitable company, and even if your income is £100 or less, you still have to prepare a set of accrued accounts. Similarly, every charity, regardless of how it's constituted or how it's structured, where its income is £250,000 or more, must prepare accrued accounts. You might need to also check the requirements of the charity's governing document to see what form of accounts you need to prepare. So even, for example, if your charity isn't a company and its income is less than £250,000, you might need to still prepare accrued accounts if your governing document requires this. Your governing document might contain a reference to preparing accrued accounts, or might contain a reference to preparing SORP accounts. Both of these references would mean that you had to prepare accrued accounts. The charity trustees might also decide that accrued accounts are more appropriate for the charity than a set of receipts and payments accounts, even if the charity is actually eligible to prepare receipts and payments accounts. This might arise because the funder that the charity receives money from has a specific requirement for accrued accounts to be sent to it each year. Or similarly, there might be specific transactions that require the charity trustees to have accrued accounts in front of them as opposed to receipts and payments accounts, and this might be because it helps them to make better decisions about the charity's finances. Let's also be clear about what we mean when we talk about the SORP. The SORP is the Statement of Recommended Practice for Charities, and it sets out the accounting requirements for accrued accounts in a lot of detail. The SORP is based on UK accounting standards, which are developed for commercial companies, other commercial organisations, and a whole raft of other organisations. But the SORP takes UK accounting standards and interprets them very specifically to apply to the types of transactions that charities enter into. But don't be fooled by the reference to recommended practice. The SORP isn't just recommended, its use is actually mandatory when you're preparing accrued accounts. The SORP has different levels of requirements depending on whether your charity is small or larger. There are basic requirements, therefore, that apply to every charity that is preparing accrued accounts, and then there are more detailed requirements that only apply to larger charities. And larger charity in this context means a charity where its income is £500,000 or more. The SORP is also split into different modules, so it's designed to help you find exactly what you need. So for example, if you're looking for information about how you should deal with your fixed assets in your accrued accounts, there's a special module that will help you to understand all the requirements to do that. Let's then go on to look at the detail of accrued accounts. There are 5 basic elements that will apply to every set of accrued accounts. So each set will include a statement of financial activities, a balance sheet, notes to the accounts, a trustee's annual report, and also an external scrutiny report. You'll also see on the slide there that there's reference to a cash flow statement, but this requirement only applies to larger charities. And remember, a larger charity here is one that has income of £500,000 or more. If your charity has income of less than that and it's preparing accrued accounts, it doesn't need to include a cash flow statement. Similar to receipts and payments accounts, different types of funds are shown separately on the face of financial statements in accrued accounts. So for example, if your charity has unrestricted funds, restricted funds, and also endowment funds, for example, then you would have different columns on your statement of financial activities to deal with the transactions in each of those different funds. The other thing to bear in mind is that your financial statements, so that's your statement of financial activities and your balance sheet, have to also show information for the prior financial period, and we call this the comparative figures. This helps people to understand when they're looking at your accounts what's happened in this year compared to the prior year. For example, your charity might have gone through quite a significant period of growth compared to last year, and that would be quite easy to see when comparing one set of figures with the previous year. In terms of the difference between accrued accounts and receipts and payments accounts, when we looked at receipts and payments accounts, we talked about how really receipts and payments accounts only reflect the actual cash transactions for the year. Accrued accounts are different because they reflect the transactions that actually relate to the financial year, regardless of exactly when that financial transaction happened. It's helpful to illustrate this with an example. Imagine a charity, we'll call it ABC Charity, and it has a financial year end of the 31st of March. It receives a bill for its electricity on the 29th of March, and it pays the bill after its financial year end on the 3rd of April. That bill for electricity would be included as an expense when the charity is preparing its accounts for the year to the 31st of March, and it would include that bill as a liability which would be included in its balance sheet as at the 31st of March. That's because the electricity that the charity has used is in that financial period. So that's what we mean when we talk about reflecting a transaction that relates to the financial year, regardless of exactly when the bill has been paid. In terms of the detail, in terms of the financial statements for a set of accrued accounts, the first statement is the statement of financial activities. This shows the income that has been received by the charity in the year and the expenditure that's been paid out. It also will show the figures for the prior year, the comparative figures that we talked about earlier. Underneath the income and expenditure for the year, all other gains and losses either received by the year or kind of expended in the year will also be shown. Now these gains and losses aren't actually transactions that have involved the exchange of money. They are more like a change, for example, in the valuation of an investment or a fixed asset that the charity has. It's a notional gain or loss rather than an actual exchange of money. Towards the bottom of the statement of financial activities, the net movement in funds will be shown. So that's the difference between the income and expenditure and taking the other gains and losses into account. That net movement in funds figure helps you to reconcile the total funds that were brought forward at the start of the year with the total funds that the charity has at the end of the year. And the figure right at the bottom of the statement of financial activities, sometimes we call this the SOFA by the way, will equal the figure that you have on the bottom of your balance sheet. Both the main financial statements will have the same resulting figure at the bottom. If you need more detail about the statement of financial activities, you can find this in Module 4 of the SORP. Next, we're going to look at the balance sheet. The balance sheet lists all the assets that the charity owns. This could include a building, any equipment, some vehicles, any investments that the charity has, and also its bank and its cash balances at the year end. Next, you have the liabilities. These are liabilities where the charity is actually due to pay money after the financial year end. For example, a bill that it is due to pay. Remember the example that we looked at earlier with the electricity bill in ABC Charity. That electricity bill would be included in the liabilities at the year end. In your liabilities, you might also have a bill for money that you're due to pay over to HM Revenue and Customs after the year end. That might relate to PAYE or national insurance contributions that you've deducted from your employees' wages before the year end, but you haven't paid it over until after the year end. Remember that the total figure that you have in terms of your net assets, that's your assets minus your liabilities, that will be the same figure that you find at the bottom of your statement of financial activities. It's the total funds that the charity has at the year-end date. Lots more detail is provided in Module 10 of the SORP about the balance sheet, but there are also a lot of other modules in the SORP that deal with very specific transactions that you will find referenced in your balance sheet. So for example, there are specific modules about fixed assets, about investments, and about how you value those assets. Next comes the notes to the accounts. Notes to the accounts are really important in a set of accounts because they help to explain to the reader what is actually going on behind the transactions that are summarised in the main financial statements. The main financial statements being the statement of financial activities and the balance sheet. Certain information also has to be disclosed in the accounts. For example, transactions between a related party to the charity and the charity itself have to be disclosed. Every charity trustee, for example, is a related party to the charity. So any transaction that exists or takes place between a charity trustee and the charity has to be disclosed in the notes to the accounts. Also, where the charity has different types of funds, these are explained in the notes to the accounts to help a reader really understand what the charity is doing. It's very common, for instance, when a charity has lots of different restricted funds, for there to be detailed explanation in the notes to the accounts about what each of those restricted funds is held for. This might explain where the money originally came from and what the charity is actually doing to make use of that money and what money it had in each of those restricted funds at the year end. So the notes to the accounts are a good source of information for anyone really trying to get a good in-depth idea about what your charity is doing and how it's doing it. Next then, we have the Trustees' Annual Report. Now first of all, before I talk about the specific requirements for accrued accounts in terms of the Trustees' Annual Report, I just want to remind you of some really good key messages for all charities. The Trustees' Annual Report is a really key opportunity for the charity trustees to tell the story of what has happened in their charity. It really helps readers of your accounts to understand what happens in the charity and what the numbers in your financial statements actually mean. Many people struggle to understand financial statements, so using the narrative report is a really valuable way of helping people to have a good understanding of what is going on. I would always encourage charity trustees, when they're writing their Trustees' Annual Report, to keep it simple and to use language which is really appropriate for the charity and for the readers of your Trustees' Annual Report. Think about who the readers are likely to be and speak to them in a way that they will find interesting, engaging, and that deals with the information needs that they will likely have. In terms of specific requirements for the Trustees' Annual Report and accrued accounts, there are basic requirements that apply to every charity which is preparing accrued accounts, and those are set out in Module 1 of the SORP. If you're a larger charity, remember that's if your income is £500,000 or more, you'll have some extra requirements to fulfil. So the basic requirements would be details like the administrative details. So for example, the names of every charity trustee, who their advisors are, what the purposes of the charity are, and what activities that the charity has carried out. There are some good examples of requirements that apply to every charity doing accrued accounts. If you're a larger charity, examples of what extra information you need to provide would be plans for future periods or details of your investment policy. But all the requirements are explained in a lot of detail in Module 1 of the SORP. Remember, the Trustees Annual Report is a really good way to help a reader of your accounts understand more about what's happening in the current year and also what you're potentially thinking about for the coming period as well. The final element I'm going to talk about is the external scrutiny of accrued accounts. There are two forms of external scrutiny that Scottish charities can have on their accounts. There's audit and there is independent examination. Audit has to always be carried out by a registered auditor. An audit is required where the income of the charity is £500,000 or more, or where the charity has prepared accrued accounts and the assets of the charity are £3.26 million or more. In those situations, you must have your accounts audited. There is no exception from this. Even if your charity only breaches the income threshold just for 1 year, there's no exception. You have to still have an audit on your accounts. If the income of the charity is lower than £500,000, then the charity would be eligible to have independent examination on its accounts. Independent examination on a set of accrued accounts has to be carried out by a qualified accountant because they will have the necessary skills, knowledge and experience to properly understand the requirements for accrued accounts and therefore to judge whether your charity has fulfilled those requirements or not. In terms of further information and further help and guidance that we can provide for you on this, there's lots available on our website. There's also a special website that deals with the SORP and all the requirements of the SORP, and you can download the SORP for free via that website. The website address is www.charitiessorp.org. Access to the SORP is completely free there, and you can download the entire document, or you can just download specific modules if you're looking for something quite bespoke. There's lots of guidance available on our website as well. I would start with the Guide to Charity Accounts, which provides a good overview of accounting requirements for Scottish charities. If you need further help with your narrative report, your Trustees Annual Report, we've got a good practice and guidance document as well that you might find really useful, and it's full of really good top tips. Lots of charities also struggle to understand what we mean by reserves. Reserves need to be explained in the Trustees Annual Report when you're doing a set of accrued accounts. We've got a fact sheet that explains about reserves in terms of how you calculate reserves and what you need to disclose in your Trustees Annual Report about reserves. If you need some help, have a look at the fact sheet. Finally, we've got good guidance about independent examination on our website. The guidance is split into two different publications. There's a guide for charity trustees to understand about the independent examination process and what they need to do to appoint an examiner, and as part of the examination process what they need to provide to the examiner. But there's also detailed guidance for independent examiners themselves about how they undertake their role and how they fulfil the legal requirements. Rounding off, there's lots of information available on a regular basis about how you can keep up to date with developments. Our newsletter, OSCR Reporter, allows you to understand what is going on with the work that we're doing at the regulator. It allows you to understand when there's new pieces of guidance coming out. Keep an eye also on our website, oscar.org.uk. You can sign up for OSCR Reporter to be sent to you via our website. Keep an eye open also for future webinars that we're going to do about accounts and also other topics too. And if there are topics that you'd be really interested in us doing a webinar about, please let us know. You can contact us through info@oscar.org.uk. Give us lots of ideas and we'll see what we can do. Thank you very much.